There's one question your bank will never ask you. Not because they forgot, but because it's not their job. They'll ask your salary, your CIBIL score, your existing loans, your documents, but they will never ask, what happens if you lose your job? What happens if your parents need expensive medical care? What happens if your child needs the best education? Because the day life stops going according to plan, your dream house can become your biggest liability. Today, we're uncovering the hidden cost of home loans that millions of Indians discover only after signing the papers. Before we continue, if you enjoy documentaries that uncover the financial truths nobody talks about, subscribe to the channel and join us for more stories that can help you make smarter money decisions. Now, let's continue. For generations, we've been told the same story. Study hard, get a good job, get married, buy a house, pay the EMI, retire. It sounds so normal that we rarely stop to question it. Because buying a house isn't just a financial decision, it's almost a social expectation. The day you buy one, people congratulate you. They call you successful, responsible, settled. Banks welcome you with pre-approved loans. Builders promise luxury. Advertisements tell you, now is the perfect time. And before you know it, the biggest financial commitment of your life starts feeling like the most obvious decision. But here's what's fascinating. Almost nobody asks what happens after the celebration ends, after the relatives leave, after the housewarming photos are posted, after the excitement fades. Because that's when the real story begins. Not the story of buying a house, the story of living with it. Let's do a simple thought experiment. Imagine I told you that homes in India have actually become more affordable. You'd probably say, great, then why does everyone complain about EMIs? That's exactly the mystery. On paper, everything looks perfect. Income has grown, loan eligibility has increased, banks are offering longer repayment periods, monthly EMIs look manageable. Even affordability reports suggest this is one of the best times to buy a home. So where's the problem? The problem is, paper doesn't have children. Paper doesn't lose its job. Paper doesn't get sick. Paper doesn't care for aging parents. Paper doesn't face inflation. Paper doesn't wake up to an unexpected medical emergency. Life does. And that's the difference between being able to buy a house and being able to comfortably live with one. Because the real test of affordability doesn't happen on the day you sign the loan papers. It happens 3 years later, 5 years later, 10 years later, when life stops following your plan. One signature, that's all it took. One signature that quietly began shaping the next 20 years of Kumar's life. Not because he made a bad decision, not because he was careless, but because he was doing exactly what millions of Indians dream of doing. The year was 2008. Kumar was just 26 years old, young, ambitious, full of hope. His wife was expecting their first child. Like every young couple, they weren't chasing luxury. They weren't looking for a mansion. They simply wanted something every family dreams about, a place to call home. A place where their child would take the first steps, where birthdays would be celebrated, where laughter would fill the rooms, where memories would last a lifetime. So when the bank approved his loan, it felt like a dream had finally come true. The family celebrated. Relatives congratulated him. He held the keys to his new home, believing he had secured his family's future. But sometimes, the most important chapter of a story begins after the celebration ends. Because hidden behind those keys was a monthly commitment that would quietly shape every major decision he made. The EMI was around 19,000 rupees every month. Kumar's monthly salary? Only 25,000 rupees. Just let that sink in. After paying the bank, there was barely enough left
to run an entire household. Rent was gone, but groceries remained, electricity remained, transport remained, medical expenses remained. And now there was a baby on the way. Every month became a puzzle. Every rupee had a purpose. Some months, the numbers simply refused to work. The family borrowed money from relatives, not to buy something new, but simply to make it to the next payday. Still, Kumar never gave up. Like millions of hardworking Indians, he believed,
This is temporary. Next year will be easier. So he did what most of us would do. He worked harder, stayed longer at the office, accepted every additional responsibility, rarely said no. Every promotion mattered, every salary hike mattered, every bonus mattered. Not because he wanted a luxurious lifestyle, but because he couldn't afford to earn less. Years passed. His income increased, but something else increased too. Living expenses, family responsibilities, daily costs. Came another decision, a top-up loan. The EMI climbed even higher. The house became bigger, but so did the burden. Slowly, without even realizing it, the home loan began influencing far more than his monthly budget. It shaped his career decisions. It discouraged risk. It reduced time with his family. It made every professional decision revolve around one silent question. Can I still pay next month's EMI? Years later, the loan was finally repaid. The debt disappeared. The EMI stopped. But when Kumar looked back, he didn't remember the interest rate. He didn't remember the paperwork. He remembered something far more valuable. The evenings he never came home early. The weekends spent working. The opportunities he couldn't risk. The constant pressure to make sure the next EMI never bounced. Ask most people about their home loan, and they'll tell you the interest rate, the tenure, the monthly EMI. Ask Kumar, and he'll tell you something different. He'll tell you the biggest cost of his home loan was never written in the loan agreement. It was paid in time, in choices, in freedom. The house remained his dream, but somewhere along the journey, the EMI became his boss. Kumar's story isn't the exception, it's the pattern. Every day, thousands of Indians sign home loan agreements, believing they're buying financial security. But many are also unknowingly signing up for decades of financial pressure. The numbers tell us people are borrowing more than ever before. Large home loans are becoming increasingly common across the country. The question is, why? Is it because homes have become more affordable? Or because we've become more comfortable living with debt? Banks have sophisticated algorithms, income models, risk assessments, credit scores. But they all share one dangerous assumption, that tomorrow will look exactly like today. And that's the one thing life almost never promises. Meet Teja. Years of saving, one dream, one home, one loan. Almost all his savings gone into the down payment. Nearly 60% of his income gone into the EMI. The bank called it affordable. Life called it compromise. Family trips waited. Vacations disappeared. Every decision began with one question. Can we still pay the EMI? Years passed. His income increased, but freedom didn't. Every month, your home loan sends you a bill, but there's another bill you'll never receive. No SMS, no email, no bank statement. Yet, it's called opportunity cost. Imagine two people, same salary, same age, same monthly surplus. One invests 30,000 rupees every month. The other uses the same money to pay a larger EMI. 20 years pass. One watches compounding quietly build wealth. The other watches debt quietly disappear. Both own a home, but only one has built real financial freedom. Because the biggest cost of a home loan isn't always the money you pay. Sometimes it's the wealth you never got the chance to create. People think a home loan only changes your finances. Sometimes it changes your identity. Take Gulshan, for example. He chose freelancing because he valued freedom more than routine. No office, no fixed hours, no boss. Just his work, his ideas, his time. Then came the home loan, 55,000 rupees every month. Unlike freelance income, the EMI never fluctuated. It arrived on time, every time. Eventually, Gulshan stopped asking, "What work do I want to do?" He started asking, "What job guarantees next month's EMI?" So he accepted a full-time role, paused his investments, and quietly gave up the freedom he had spent years building. The home loan didn't trap him overnight. It simply made freedom too expensive. Every home buyer asks the same question: can I afford this EMI? But that's the question banks want you to ask. Here's the question you should ask instead. What happens when life interrupts my plan? If you lose your job, does the EMI stop? If your income disappears for 6 months, does the EMI wait? If your parents need expensive medical care, does the EMI become smaller? If your child gets into the college of their dreams, does the EMI help you pay the fees? If you decide to change careers or start a business, does the EMI support your dream? No, it doesn't. That's why a home isn't affordable just because you can pay the EMI today. It's affordable only if your life can survive when tomorrow looks nothing like today. Here's the uncomfortable truth. Banks don't sell houses. They sell certainty. And certainty comes at a price. Not just interest, not just EMIs, but freedom. The freedom to say, "I'll quit. I'll start my own business. I'll take a year off. I'll spend more time with my parents. I'll travel. I'll invest. I'll live." That's why, before asking, "How much loan can I get?" ask yourself something much more important. How much freedom am I willing to give away? Because the biggest house doesn't always create the biggest life. Sometimes it creates the smallest. One day, your home loan will end. The question is, what will be left when it does? A house or a life you truly enjoyed living? Before signing your next loan, don't ask, "How much can I borrow?" Ask, "How much of my freedom am I protecting?" Because wealth isn't the house you own. It's the choices you still have after buying it. If this documentary made you stop and think, share it with someone who's about to buy a home. Sometimes the best financial advice is shared before the papers are signed.